Topic number one, Sony.
Sony, yes, great company. This is a pretty diversified business, but I'll focus really on the entertainment assets today. So in gaming, we know Sony makes the PlayStation 5. That had some issues in terms of production because of supply chain issues, as we saw with many, many other companies. So the deliveries there are picking up right now. We've seen some estimates that are around getting close to 2 PlayStations sold for every Xbox. So they're doing a great job there. The other parts of the business that we like, the music side, Sony is one of the 3 main music companies around, the other 2 being Universal and Warner. That business has really seen a resurgence with streaming. And those economics, a lot of them go to these 3 companies. And the other thing on the pictures side, so that's TV and movies, I think one thing to think about that's really interesting is if you've been, I don't know if you're watching Last of Us.
Oh, I am.
Yeah, okay. Did you know it was a video game?
Yeah, and apparently the scenes in the video game, I haven't played the game, but mirror the show pretty closely.
I have also not yet played it, but it's a great show. This was a story that was pitched a long time ago, the cross kind of synergies between IP, from gaming to shows.
And it hasn't, I mean, we've seen some movies, but yeah, it hasn't seemed to have really taken off.
But to this extent, right? It's been a huge hit.
They're blending the two,
Right, so I think there's a lot of potential in this going forward. It's a real thing, clearly. And Sony has a lot of, 10 out of 10 games, right? This was widely regarded as a kind of a masterpiece in gaming. They also have the God of War franchise, so they're good, really good intellectual property here. So it's a good company.
Yeah, that's home box office in Canada. I just watched the famous 3rd episode, the long love affair between the 2 guys, and
Spoiler. No, I'm kidding.
No, I'm not going to say what happens, but I was crying, I got to admit, towards the end. Enphase Energy, remind us what they're all about.
Yes, this is a solar inverter company. So basically, when you have panels, you're going to get direct current. You need to convert that into alternating current for your house. And so they make the microinverters that allow you to do that. They fit with the panels, right? And their technology is kind of taking over the old technology, string inverters, which, just to make it simple, more efficient, more flexible, whereas string inverters basically would help you to control an entire kind of array there. With microinverters, using Enphase's technology, you can really get specific to each individual module. And so that creates for greater efficiency, better ability to kind of harness the sun's power and whatnot. So they're also turning from like a component type of situation to systems, which is always a good thing in technology. With that, I mean, we started with the inverters, and now we're moving into storage and EV batteries and whatnot. So they might become turnkey kind of, or provide a suite of things anyway. So I think one interesting way to think about this is like in the semiconductor industry, they would talk about it as like number of sockets that a competitor can compete with you in, right? Right. You have 3 different things. Those are all potential points of competition. But if you combine those 3 things into a system that works, you're only giving your competitors one place to attack. So I think that's an interesting way to think about it. Okay, and then your final idea here is Brookfield Asset Management, which is the spun-off asset management unit. Right, so following the spin, we now basically have the most pure play exposure to fee-related earnings. Fee-related earnings, mostly on third-party capital, are the most sought-after, highly valued part of the alternative asset managers. I'll compare that to like carry, for example, right, which is going to depend on transacting and is more lumpy. So compared to what? Sorry, carry, like performance fees. Oh, I see. Yeah, carry fees. Yes. Right. Okay. And also transactions and whatnot, having to unlock value that way. Those things are lumpier, right? So with this, you get almost pure exposure to the management fees. There's no carried over. I hate to use that twice, but from BN. That will the carry that accrues to BAM will only take effect in a few years. So the point is, right now it's pure exposure to management fees. So I'm sure you're thinking about the exposure to real estate.
Right.
Yes,
Yeah.
That's a thing. 25% around of fee-related earnings, significant, but not. I think the really interesting thing here is that they're overexposed relative to, like a Blackstone, for example, to infrastructure and credit. Two areas that should do pretty well in an inflationary environment. We know infrastructure, long life assets, inflation escalators, that sort of idea. I think that will continue to hold in. And then the credit side, there's obviously opportunities there given the carnage we've seen in the markets and their ownership in Oaktree.
So they may be able to pick up things.
That's kind of the same thing I was saying about Blackstone applies to BAM here, right? They just finished fundraising for one of their flagship real estate fund. So while some of their properties might be having a little bit of issues, they just raised $15 billion that they can now deploy into a depressed market. So same idea. I think this is a good, same with Blackstone, good environment for people who have capital available.
Okay, Shane, thank you very much indeed.
No problem.
Let's have a look.